Okay, so you might be noticing the thumbnail and saying, what the heck is this guy talking about? So you can truly understand where I'm coming from and what I'm saying. I'm not saying hating your job is good, especially in trading, and I'm not saying liking your job, especially in trading, is bad. As a trader, you want to be in the market less and less. The longer you're in the market, the more trades you put on, which the total risk and risk amount you're going to have. You're taking risk by every entry you have, putting your hard-earned money on the line. So to make this simple, we're going to address Trader 1 and Trader 2. They have the exact same strategy. They are considered our baseline. So now Trader 1 dislikes being in the market. They use it as a second income or as a tool. Maybe they do other things with their money, Amazon, real estate, whatever it is. They're just striving for extra money at the end of the day to put in their pockets or maybe invest elsewhere. We'll get back to Trader 1 in a second. Let's go to Trader 2. Trader 2, on the other hand, loves the market. They love trading. Every time they press that button, they get a dopamine rush. I go over the dopamine rush and everything in my master course, but we're gonna go through it a little bit in here. This works in every single person. Every single human has the same chemical reaction. That gain from pressing that buy button or that sell button, watching your profits go up, will give you a dopamine spike in the mind. Now, for someone who loves trading, that dopamine spike is going to be increased. Along with that profits, they love doing the actual action and they love being in the market. Now, as they go along their journey and they trade more and more, the overall dopamine spike is less and less. So just like any other drug, they're going to want to spike it higher. They're going to want more and more dopamine. Now they're taking more trades, bigger trades. They're using more risk, more money. Along with using more risk and more money, your psychology, your mentality of a trader is going to go out the window. This will then lead to a huge spiral down. You're going to take bigger losses. You're not going to cut your losses. You will not be trading an edge. You're basically just gambling at that point with higher amounts of money and zero risk. This is not trading. Technical analysis, edge, risk management, it's all out the window. They're just chasing a big rush at that point. Now we'll come back to Trader 1. He or she takes the right setups. The only setups that they take are in their edge. They use the right risk management and the right amount of money that goes along with their mentality as a trader. They are completely detached from the money. They are trading like a business, which we all should be trading as. They take some wins in their edge. Edge is not present anymore. They are content with their day, content with their wins, whether they're big or small, and they wait for their edge to be present again in the current day or the next. They have zero interest in the market anywhere else. They stay within risk management. They stay within sizing. They are doing everything right as a trader. So now you might be saying, if I like the market, what am I screwed? It's not the case. We first have to assess the knowledge of the trader. Like I said, Trader 1 and Trader 2 has the exact same knowledge. We started them off at the baseline. In theory, a good trader has good technical analysis, edge in the market, good risk management, and then coming along with that, you have good psychology and mentality as a trader. All these things are going to align together and give you confluences to have that good mentality. The simplest takeaway, if you have all these things and you still don't have the mentality, it is the money. You're using too much money than what you mentally can handle to lose. Now, if as a trader you don't have that baseline yet, this is how to get it. First, we need technical analysis skills. You have to refine your skills, whatever kind of trader you are. Supply and demand, fair value gaps, trend lines, support and resistance, Fibonacci levels. Whatever your form of trading, refine your technical analysis levels. Watch the market, read the tape, read the times and sales, read volume. Volume is the absolute biggest factor in the market. It is the absolute key. Once that's done, we take edge into account. Find where your edge is in the market. Find where your edge is present. This is going to go hand in hand with your technical analysis. Once you found your edge in the market, it's time for risk management. What are you risking for your reward? If you're risking $1, your minimum reward should be $2.50. Me personally, I like a 4 or 5 risk to reward. As you get more advanced and you start scaling into your positions, those 4 to 5 possible risk to rewards will then deem to be a 10 to 15 risk to reward, deeming your confluences are there and your probability of setup is high. For me, something like that is a supply and demand zone with 2 or 3 confluences in the market showing me that the market's going to move in my favor. We'll go over that and tackle that in a whole different video. Once risk management is then accounted for, we have to tackle the psychology of trading. The number one thing with this is your money. How much money you're putting in, how much of your overall account size you are using. This ties hand in hand with risk management. The number one way to see this is the losing trade. once that stop loss is hit, how you feel about it. If you see the losses go up, as in the market's not moving in your favor, and you start to get very jittery, you start to get agitated, you start to get out of your zone, that means you're putting too much risk on the table. But do not forget, a losing trade is not always a bad trade. Also, a winning trade is not always a good trade. Again, we'll go over this in a whole nother video, but if we keep on going off topic, side to side about each thing, we will take hours here. So we'll stay on subject for now. Doing all these things correctly, assessing your technical analysis, edge, risk management, and psychology, will put you in the position to make profits in the market even when some theses are deemed invalid and you do lose trades. Now, me personally, I love the market. I love trading it, I love watching it, and I love teaching it. I love the opportunity that it brings to scale up and make good money in the market and potentially put those investments elsewhere. Being able to make a trade from anywhere, whether it's your home setup, on vacation, visiting family, whatever it is, and being financially free at the same point is second to none in my opinion. I do think this is the goal for most traders. I think this is the first aspect that they look at. Now, being that I love the market, I was once a trader too. And I do believe most traders are at one point too. I tried trading every single candle outside of my edge, sizing up, not being okay with the losers, holding them all the way down, waiting for them to come back up, waiting for the market to come back into my favor after my thesis was deemed invalid. And that is the absolute worst part of it for your mental aspect. When your thesis is deemed invalid, the trade should be cut immediately. No questions, no ifs, but whens, where. When this happens and your thesis is deemed invalid, say we're going long, it came underneath my stop loss, and for example, I didn't cut it, the market then comes back up and I make profit. Doing this the next day in the market, I will think that's okay and the market will still come back in my favor. Now say the next day I do this and the market never comes back in my favor and it just keeps on coming down. I'm then going to hold that loser, still hoping like it did yesterday, coming back into my favor, and just losing more and more and more money. It is a complete spiral down of not only your account, but your emotions. Now, my top recommendations are if you take a bad, maybe two bad trades, or even one or two good trades on the day, and you feel like you want to take more, or you're out of your edge and you notice it, log out of your broker. It's okay to watch the market, especially if you're new. You need to learn, like I said, volume, times and sales, price action. You need to learn all these things and you won't learn them without screen time. So if you just make a trade, log out and walk away in the beginning, that's not going to help you understand the market. Understand how the market moves for a couple weeks, couple months, couple years, whatever it takes you. Whatever that learning curve is to understand the market, sit in the market and watch it, but do not trade it. Log out of the broker when you're done with your trades, when you're trading inside of your edge, whether it's a winning or losing day. Screen time is 100% needed. Now, like I said, after those couple weeks, months, years, whatever it takes you, that's when you start to reap the benefits you have been waiting for all these months or years in the market of you sitting in front of the screen and watching these damn bars go up and down. Only put risk on the table when you're in your edge. Now, you can come back the same day, you can come back hours later. Whenever the market is back in your edge and you see good confluences, by all means take that trade. But if we're not an edge, if we're chopping around, it's as simple as just walking away. You've already spent that time refining your craft and understanding the market, that these benefits are just waiting to be used, so there's no point to not use them. Even if you're done 5 minutes into the day, log off and get to your life. You already put the risk at the table, you already spent months and years learning, hundreds of hours at the screen. So once you found your trading strategy, your profitable strategy, get away from the market until it's in your edge or the next trading day. Set your alerts where your edge is and simply just walk away. Only put risk on the table when you have a high probability setup, when the percentages of the trade is in your favor. So I hope these quick tips helped. Whether you're trader 1, trader 2, you need someone to tell you need more time in the market, you need to find your edge, or you need someone to say, get the heck off of the screens. If you're having trouble trading, I have a Discord, I have a master course, I have everything you could think of, trading strategies, psychology, price action, book maps, you name it, I have it. All the links will be in the description below, and thank you for watching.